It's Wednesday, January 6th. This is The Street Live. I'm Katherine Ross, and I'm joined by Jim Cramer. Jim, how are you approaching the markets this Wednesday?
Well, I want to go against the prevailing wisdom. I see, for instance, that crude oil inventories just fell 8 million barrels. That's going to spur more rally, more buying in oil. We've got huge buying in the infrastructure stocks. We've got a gigantic sell of all tech. And I am more nuanced than that, Catherine. I think that you're looking for tech stocks to buy, and they're finally coming in. So you can't just sit there and say, you know what, I'm going to chase the oils. I'm going to chase the banks. You got to buy what is down. It fits the thesis that I talk about, some of the big themes when the year started. Digitization is not going away. You're getting an opportunity to buy some of the key digitization stocks like an NVIDIA and AMD. That's what I'm focused on. I want to be the opposite, okay? I want to be the opposite of what people are doing at this very moment, if only just because I like to buy it when it's down, not when it's up. I don't like to chase.
And Jim, I was telling you right before we started the show that this might be the perfect day for your Action Alerts Plus members only call over on actionalertsplus.com, because we do finally have the Dow up and the NASDAQ under a bit of pressure.
Yeah, it's usually the opposite. Absolutely right. I got to tell you, Catherine, what I'm looking at is the Dow going nuts up. And a lot of that is the banks. I think that that's terrific. We've got some banks. We have Goldman Sachs. Goldman Sachs is up $12. Now, if I didn't own Goldman, would I buy it up 12? Absolutely not. I just think that that's ludicrous. What you're looking for is to buy NVIDIA down 12. And that's kind of how I like to position things. I don't want to make it so that suddenly people say, you know what? JP Morgan's a serious great buyer. It's been up for weeks on end. So I say, let's be a little careful, a little more circumspect, and go against the grain. Don't go with the grain, because you're going to discover that's not going to be your friend in a couple of days.
Jim, one headline, or I guess two headlines really, that investors are eyeing right now is the Georgia runoff races. We do have Democrat Raphael Warnock winning over Republican Kelly Loeffler, but the race between Republican David Perdue and Democrat Jon Ossoff still hangs in the balance. So as we await a final call in this Ossoff-Perdue race, what's your advice to investors?
Well, okay, let's think about this. We were told, I was going over this with my writing colleague, Matt, we were told that if the Democrats take the Senate, it's going to be disastrous for the stock market. Now, you know that I've been talking and writing and doing in these videos that it's the opposite, that it's just not going to work like that, that if you stick with the big themes, you're going to make a lot of money. I reiterate that. I did a real money piece, by the way, about how you can buy oil, but you have to sell oil. But the big themes, you can just buy and put away, because those are going to be with us. So, I mean, I have to tell you, I'm looking at what I'm seeing, and I'm saying, yes, it turned out that it was a non-event because there's going to be more stimulus, and that's what the Martin Marietta Materials is telling us. That's what Vulcan Materials is telling us. That's what United Rentals is telling us. And there won't be maybe some higher taxes for some of these companies, but in the end, stimulus is great for Walmart. Now, Walmart is one of our absolute biggest names. You want a stock to buy ahead of the conference call. I mean, look, I am abject that Walmart should be over 150 and over 150 right now. That's only up 2, but it's been down, down, down. That's the kind of stock you buy right now.
Jim, your stop trading this morning was Constellation. My inbox was kind of a slew this morning of what happens to cannabis if Democrats win both races in Georgia. So I'm going to pose this question to you. We have a Democrat coming into the White House, and now there's this possibility that both Democrats take the Georgia races. So what's next for cannabis stocks?
Look, I think that people are misinterpreting what's going on in our country. I think that the Congress wants to decriminalize marijuana. They don't want anyone to go to jail for it. The Democrats aren't in favor of legalizing marijuana so that it can be used everywhere. They're just simply involved with making it so that people don't get jailed for it. So I think things are premature once again in cannabis. But I also recognize, like I do with the oils, when I recommend Chevron and Pioneer and now Kinder Morgan, I recommend Canopy Growth. Tomorrow, we get the earnings from Constellation. Constellation has half of Canopy Growth. The moment that this thing is legal, they get the rest. They're no longer down as nearly as much. So I like the hedge position, and I like Grow Generation because I like the picks and the shovels for people who want to grow cannabis, like you can if you live in Oregon. So I don't like the idea of buying the cannabis stocks on this, because we're not going to see something tomorrow that's going to reward you. It's just not going to happen like that. So if you want to play, I've given you the ones to play, but otherwise stay away.
Jim, another headline to watch is the NYSE. They're now reversing their reverse on whether or not they're going to delist Chinese telecom companies. Yesterday, we did talk about the financial benefits for keeping these companies on the NYSE for the NYSE. So why are we seeing the NYSE suddenly saying they are now going to delist these companies?
I think they're getting pressured. Remember, the president's still capable of creating havoc. We've seen him do that. The New York Stock Exchange can reverse it again if it wants to. I have to tell you that this is just amateur hour. The New York Stock Exchange wants to make money from listings, and they have yet to really care about what's listed. Kind of a caveat emptor. The U.S. government under President Trump wants to destabilize China and make it so the companies raise money in China, not here, so that we're not funding their operations, which typically are involved with the PRC. Now, I got to tell you, when you ban these the apps, that's very important, because China monitors these apps very closely. And so I totally get what the government's trying to do, which is to say, listen, we're not going to let our people be monitored by the Chinese. Everything that their government doing makes sense. Everything our government's doing makes sense. What's not making sense is the way that we're interacting with the private sector. The U.S. government and the New York Stock Exchange should be on the same page. And this have them, don't have them, have them. No, I mean, it looks like it's Mickey Mouse. So let's make a policy. Policy should be, we're not going to let the Chinese list here, or we're going to let the Chinese list here and caveat emptor, or we're going to let the Chinese list here and they've got to fulfill the U.S. financials that every other company has to have, meaning no caveat emptor. That's three choices. Pick one, but let's come up with a policy.
Jim, on Mad Money last night, you talked about how sometimes high yields actually show red flags, which really led me to wonder, what kind of homework do investors need to do to prevent themselves from buying stocks that could possibly hurt them in the long term?
Yeah, great question. I mean, a lot of people are saying to me, Jim, what is the criteria? Well, you want to know if the cash flow covers the dividend. But you know what? That's fungible, because you could be looking at the operating cash flow. You could be looking at any numbers of different ways that people analyze cash flow or earnings before interest, taxes, depreciation. I think you got to go with the verbiage. I think you'll read the conference calls. You see whether the company's doing well or not. If the company's not doing well, or it's opaque how they're doing, then it's a red flag. If the company's doing well, then you can actually take a little bit more of a risk, as I did with Kinder Morgan when I recommended KMI. That's a corporation, by the way. It is not a master limited partnership. I'm not recommending any master limited partnerships, because I just don't trust any of their yields. Why? Because most of them can't cover the distribution. Now, I mean, someone might say, Jim, how do I analyze that? Well, if you go back to Stay Mad for Life, I actually talk about how to analyze that, but it's complex. But you can take my word for it. The MLPs are a disaster, and they're going to stay a disaster because that's not what's going to happen in the country, which is having rates go up anymore and being able to issue stock and build more pipes. I like Kinder because it's done its build out, and it turns out that there won't be any more, for the most part, build where they are. So maybe they can raise rates someday, but that group is more of it.
Jim, your mad dash this morning was JP Morgan, and we're seeing the bank stocks today get a little bit of a boost from the Democratic contenders in Georgia. So we've talked about the concerns around banks, but what kind of investing strategy should viewers take if they're interested in JPM?
Well, I think that JPM is totally a function right now of that I'm looking at where the 30-year treasury, 20-year treasury, it's a function of believing that they're going to be able to make more money lending. And a function of believing that they're going to make more money on your deposits. Maybe one day the Fed will even raise rates because things are better. You know what? I'm not going with any of this stuff. I think that what you need is a strong M&A market. You need advisory services, and you need better dividends. And that means Goldman Sachs. That means Morgan Stanley. We own Goldman Sachs for action alerts. JP Morgan is the blue chip, so it's always going to have money going toward it. I mean, I was looking today at Key. At first Horizon, H-band, they're all doing quite well today, and they all make sense to me. First Horizon's up $1. About time. I mean, the company's doing incredibly well, and no one seemed to care. I can understand buying those. As a matter of fact, I wish I had. But I do think that what you really want to focus on is the earnings profile. And when JP Morgan reports, I don't know how well it'll do. I just don't. I do absolutely know that Goldman Sachs is going to have a barn burner, I believe.
So let's talk about a stock that you do know is doing well, and that's Apple. Tim Cook's cash bonus was raised to $10.7 million, in part due to the pandemic forcing Americans to stay home, which lifted profit for Apple. And you've been a huge fan for as long as I've known you. So with this new year...
Okay, so Apple put out some news today about revenue streams that was incredibly bullish. No one's even paying attention to them. I mean, it's kind of nuts. I think that Apple is, here it is, it's down 2. It's down 10 points from it. It's down 9 points from its high. Can it go down more? Oh, sure. I mean, it was up huge last year, and it's one of my absolute favorites. As you mentioned, I say own it, don't trade it. But Apple's statements that it came out just this very morning with indicate that they're going to have very strong service revenues. And I think that Apple is a buy. I know that there is absolutely an abhorrent feeling toward technology right now. The money continues to come out of tech. The money continues to go into the industrials. I have no problem with that. We own a ton of industrials for Action Alert. The money's going into retail. We own good retail for Action Alert. I like Costco down here for second day. I like United Parcel. It's only up. It's barely up. It's not even up $1. There's so much that you want to buy, but what's down, Salesforce and Apple, those companies could be very good. Why? Because they have customers. And I don't care what's happening with companies like the oils, because I think that, as I say this morning in Action Alert, they may actually be stocks that are big losers under ESG, even if they're winners under a Saudi price, a Saudi cut of supply. I'm not interested in those. I am interested in stocks of companies that embrace the themes that I keep talking about. Apple is at Apple's at so many different themes, whether it be the explosion of work anywhere, whether it be digitization, healthcare. There's so much that's going right in Apple. This revenue stream that they talked about this morning in this release that no one's paying any attention to is dramatic. And I think people should be focusing on it. It makes me want to buy Apple even more.
And finally, Jim, the Senate is performing the largely ceremonial task of confirming President-elect Biden today, but some GOP senators have said they'll oppose the certifying this election, which, despite false claims from President Trump, has shown no proof of election fraud and has been voted on by the people and the Electoral College. So is this a concern for investors, or is this just background noise?
At this point, it'll be good to have it over. I think one of the reasons why we can rally is that there turned out to be not more groundswell than this, and that my friend Jeff Sonnenfeld has been doing this remarkable work. He's this Yale professor rounding up business people who I think are, who are so against what's happening. They're talking about sedition. I think that the Trump wing of the Republican Party may have tremendous, there may be tremendous amount of love individuals for Trump. But I think that the fact that that Georgia just went to the Democrats, that's totally about, I believe, people who feel more motivated about Trump than they feel motivated about these two candidates. Democrats wanting to come out because they think that Trump is bad. Republicans want to stay home because basically he said that it's going to be a rigged election no matter what. So, I mean, there's really, we have an incredible moment here where you could argue that Trump is destroying the Republican Party. Because the Republican Party should have won Georgia. That's crazy. So, yeah, I mean, I think no more people joined, in part because I think that the people who are in favor of Trump still need money. Okay, they need money to win, regardless of whether the people might vote for them. And I think that if you began to challenge one of these one of these Republicans with someone who's a more traditional Republican, not a Trumpist, that person's going to get a lot of money. And the longer Trump stays in office and keeps tweeting, the worse the Republican Party is going to do.
All right. And with that, Jim, I'm going to let you go because you've got to get ready for your Action Alerts Plus members only call, which starts at 11:30 a.m. this morning. You can, of course, watch it over on actionalertsplus.com. Jim, thank you so much for joining us today. Viewers, thank you for tuning in. I'm Katherine Ross, and we'll see you tomorrow.